As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. Today we have a first-time guest. Murray Nye, CEO of Winston Gold Corp, is here with us. It's the first time we've ever had the acting CEO of an actual gold mining company with us. Murray, welcome. Thank you for joining us here on Reluctant Preppers.
Yeah, thanks for having me on your show, Dunnigan. It's a pleasure to be here. I've looked at some other interviews you've done, and quite intriguing.
Now, we've noticed from your background that you've been involved in the mining industry for at least a couple decades, both on the production side as well as the financing and startup side. And if you could just give our guests a quick, or our audience, a quick understanding of your background and your expertise before we plunge into some of you, picking your brain a bit about what's going on in the gold industry.
Okay, yeah, I go back into the 80s as far as financing these things. I worked for the company is now known as Canaccord back in the early 80s, and then moved on to Yorkton Securities in the later 80s. And after that, I got involved more on the startup side of things and organizing companies and trying to get them financed. And we hadn't really, for years and years, I hadn't really looked at the mining business at all, Dunnigan. But back in, I'm going to say 2005 or thereabouts, we had a public company that we sort of controlled, that we were looking to do something with. And I made my first money in the market back in I'm going to say 1980. That really dates me, when the gold price went to $800 an ounce. And I said to my partner at the time, maybe we should look at doing something in the gold business and or gold industry. And the thought came to my mind. I was on the board of another junior mining company that was basically a silver producer. And there's a fellow on the board by the name of Mike Gunsinger. And Mike, I had heard lots of good things about. Him and I shared a few ideas, and I knew he knew lots about mining. I knew very little other than trying to finance these things. And I knew how difficult that is. And so when I asked Mike to give us a hand, he'd retired. He'd been a contract miner for, I'm going to say about 40 years at that time, and had put a lot of mines into production. In fact, he put Barrick's first mine into production. I believe it's known as the Renabi gold mine. And so I gave Mike a call, and I said, Mike, here's what we're thinking of. We've got a company. I think we can get it financed. Can you help us find a good asset for it? And he didn't hesitate. He said, Murray, what I would do is I would look in Montana, because I did a lot of mining down there in the mid-'80s, early '90s, and I think there's a lot of good gold properties in that state. He says, I think the jurisdiction is pretty friendly towards permitting and whatnot. And he says, if you like, I'll give you a hand. So him and I went down to Montana. He knew a fellow by the name of Roy Moen, a wonderful man that I got to know and like Roy a great deal. He's passed away now, but Roy owns several very good gold properties, and was kind of one of the top guys in that state as far as these assets. And we made a deal on a historic gold mine called the Drumlummen Gold Mine, which is about 20 miles northwest of the state capital of Helena. And then we attracted some investment from Toronto. There were some guys there that liked old gold mines, because usually when you hear the expression "gold is where you find it," and if you've had a former producer, there might be a chance you'd have a better chance of finding some gold. And so we went ahead and purchased the property, wound up getting it financed, and basically took it from I'm going to say quasi exploration stage right up to production. And it was a very exciting project. We had the former governor of the state, Brian Schweitzer, was very, very helpful in helping us with investors and getting them comfortable with his state and the attitude there in the permitting process. I think we developed some very good relationships with the DEQ in that state, and as well as MSHA, the Mine Health Safety people. We got to know a lot of the suppliers, people that contracted in the area. Provided a lot of jobs in the area, I might add. In fact, to the point where the governor invited us to the State of the State address and congratulated us on creating 140 new jobs in this state, in this old mine. And at the time, it was the gold price was that was when we got into production around 2011, the gold price was starting to peak. We wound up having a fairly large treasury at the time, and then I think we were ripe for some sort of takeover. And what happened, Dunnigan, is we wound up in a proxy battle over control of the company as far as management was concerned, and wound up winning. I'm going to say the first phase of that battle, but they got a postponement on the annual meeting and managed to get enough votes to take over the company, and we were left on the sidelines. But because we had such good experience in the state, we thought we'd try again, and hence that's what we're up to now. We acquired some property back in 2013, 14. The market was absolutely horrible at the time as far as junior mining companies were concerned, but we were able to tie up some property on a lease basis. So we leased the property at a very reasonable rate, and have subsequent to that negotiated a purchase price if the project warrants that type of investment. So we're back at it again, and we've got a good team behind us. And once again, basically, I was able to secure most of the people that we had on that Drumlummon mine as far as geologists. Head miner Dave Whiteley's back with us, and Mike Gunsinger, of course, is helping us. So that's a little bit of my background in that area, and we're very excited about the prospect of doing this all over again, because at the time we had what's known as a very high grade gold mine at the Drumlummon, and of course that with there's a saying in the mining business, gold mining business, is grade is king. So the higher the grade, I think the better chances you have of being successful.
So you've been in as you mentioned, you've been in the gold production market for decades, and you can give us an experienced eye that can give us some clues, because people always talk about history doesn't repeat itself, but it rhymes, and that if we don't learn our history, we're doomed to repeat it. And there's a lot of parts of the history of the precious metals market people would prefer not to repeat, but let's learn from them, and we'll look a wiser eye to what's going on now and going forward. So can you give us your insight into what, on the global mega trends that are driving the precious metals markets, what vital factors do you see that are driving the metals business today, and how is tomorrow looking either different or the same as today? So where have we come from, where are we at, and where are we going in the precious metals industry?
Well, I think what we're seeing here is we have a spreading loss of confidence in the central banking, both from investors and policies. I think there's a lot of worries as far as the banking system is concerned. Our view is that global mining production appears to be locked in an irreversible decline for the next 5 to 10 years, because basically there's been no exploration, or very little. There's very few new deposits coming on stream, and the industry reserve life is dwindling, and costs are going up. And then there's a lot of barriers to new mine construction, and it seems more formidable than ever than it has for the last 20 years. I think the U.S. economy is. I'm in Canada. I think our economy is kind of in the same basis. I think is cruising at stall speed on a best case basis. There might even be another QE or even more radical measures needed. And our feeling is that gold is extremely underowned in North America, at least. I don't think we've never ever seen a financial crisis like they have in Europe over the decades. And I think this, the metal's been the gold market has been kind of in a I would call it almost like a stealth bull market since they've radical changes in monetary policy that began around 2000. So I think there was a pretty good correction from 2011 to 2015, which kind of took the bright spot off the gold market. But I think it's coming back. I think people are realizing that it's with the way things are happening in the world out there, that it's not it's probably a good idea to own some of it as a hedge against any kind of financial crisis or anything like that coming along. And just the fact that I think that that's under-owned, I don't think people realize. A lot of people don't realize how to even go about owning any physical gold. And so it's I think once I remember back in I'm going to call it 1979. Dunnigan, when we had the last, I'll call it hyperinflation move, where, gold went from, $35 an ounce all the way up to over 800, I believe. And, everybody was looking for it. So, I think it's nice to be, in early. That's why I think we're trying to position ourselves in this industry to have, to have a head start in an area that we think is going to be very bullish over the next few years.
Yeah, you mentioned that interesting phenomenon where so many people nowadays do not know how to own gold. It's ironic because if you go back to our founding of our country and our Constitution, the Constitution explicitly permits only Congress to create currency through silver coinage, and we had a gold certificate and silver certificate currency bills, notes for an extended period of time, and we even had silver, 90% silver in our coins up to 1964, and beyond that to 68, and at 50% in our half dollars and so on. And but now, so it used to be like a non-issue. People that gold and silver were money. Literally, and it's only been in the last few decades that divorce from reality between the integrity of our money and now this sort of debt-based fiat has happened. But that's been enough. It's been more than a generation. It's been enough for people to lose out of touch and didn't even know how to do that. Now it seems exotic to a lot of people to even know how to go about acquiring that. But despite that, there has been record demand the last several years, and one of the paradoxes I'd like to pose to you is how do you make sense out of this, that despite record demand, some of it domestic, but a lot of it from the Eastern countries such as India, China, and other Asian countries, but worldwide demand has been at record levels for physical gold and silver in the last few years, and yet the prices have been severely suppressed. So that's one mystery. The second one is we've been told over and over by many of our guests that miners in that price-constrained environment are suffering greatly. So then the second question is, how in the world can anyone operate a successful mining venture under these conditions? So if you could help us through those one at a time, can you help us give us your viewpoint of that mystery of record physical demand and low prices?
Well, I believe there's a lot of manipulation going on myself. A little while ago, the Chinese buyers were on they had a holiday. So there was a week there where China, which is far the largest buyer of gold, physical gold, closed the markets, and then I think that led to rampant manipulation on a short-term basis. And there was October 10th, there was a report called the Belkin Report, and indicated that somebody sold, or I guess the central bank sold $22 billion worth of gold, and had a very big impact on a very short period of time in the gold market. So I believe there's a lot of manipulation. I think we have two markets. We have, and the gold market actually is, I think, thinly traded as it is. And you have the physical market where you've indicated, Dunnigan, there's a lot of demand, and it far exceeds supply. I've heard numerous times that, pardon me, I got a little tickle in my throat, but I've heard numerous times where the U.S. Mint has been sold out of lots of different coinage, gold and silver, and yet the price, that kind of indicates that there's a big demand for it, yet the price doesn't move. In fact, sometimes goes the other way more often than not. So, yeah, I believe there's a lot of manipulation going on, and you have two markets. You have the physical market, and you have the paper market. So, I think at some point it's got to correct, is my thinking, where it's got to catch up.
During this time that the demand is still high and the prices are still being suppressed, what about that question about how is it possible to operate, a successful mining operation under those conditions? Is it true that it's just going to, if this can persist, it's just going to drive most miners out of business?
Yeah, it's very, very difficult. It's a difficult business at the best of times because it's very hard to find these things. It takes a lot of expertise. There's very high risk in this business because there's no guarantees. Even when you do a good drill program and you think you've got an asset figured out, there's quite a few other things that can go wrong. So, yeah, the margins are very, very very, very slim in this business, and of course, what happens then is, I think it gets squeezed and squeezed and squeezed, and I was talking earlier about what we see. The problem with that is that of course then they can't afford any new exploration to kind of offset the reserves they're using up, and of course that further diminishes it. That you have a lot of problem on the regulatory side as far as getting these things permitted. A lot of them take a lot of money, a lot of time, and what we've been experiencing, done again as far as we're concerned with what we're doing, is that the investors that we've attracted are basically looking for short-term as far as production is concerned. So they're more interested in investing in a company that could kind of demonstrate that that we could put, if we did start on this project, there's a reasonable chance that we could have some sort of production coming back out, or call it a test mining phase at least, within, say, the first year, 18 months of the initial investment. And that's what we've been focused on as a company, and we've been able to attract some investment dollars. But for miners that keep seeing their margins getting squeezed, it's very difficult. The only thing that another problem that I could point out too is what happens in those situations is they have to high grade their deposits. Normally what you want to do with a deposit, you want to mix some of the lower grade material with the higher grade, so it improves the mine life of these things. And lots of mines are set up where they have different measurements as far as what kind of material they're putting through their mills. And, they don't want to, they would like to put a blend in that, gives them some mine life. But, when you're squeezed like this, and then it becomes imperative to keep the company going, you have to use the high grade material. And of course, down the road, once you've depleted that high grade material, it's going to even make it more difficult.
So just so we understand, because these concepts aren't necessarily familiar to everybody, you're talking about if the mining deposits have a mixture of high concentration or high grade ore and low grade ore, normally you'd like to use it in a blended sort of fashion so that just to sustain that resource as long as you can. But you're just saying when miners really get into a financial pinch, when the market prices are suppressed, they're forced to basically produce from their richest ore in order to have the economics work out right, and then that leaves it gives them this overhang then of this debt of additional low grade ore that they're going to have to use in the future.
Yeah, exactly. That's exactly right. Not all mines are like that, but lots of them have different kinds of grades as you develop the property, and like what we did to give you examples, at the mine we were operating, Dunnigan, we would create different muck piles, and one would be maybe, I'm going to say, if you don't mind, I'll use ounces per ton. One muck pile might be a 0.35, and one might be a 0.1, and the other one might be a 0.2, and we would blend those three muck piles into a blend that we would ship to the mill. And what happens there too is, because if you do that, if the mill's getting a constant kind of product, and it's very easy for them to mill it properly. But when you start moving, when you start changing things like that around, it can be more and more difficult.
So, do you anticipate that the current pricing environment is going to pressure some of the more financially fragile, or those who have depleted their best resources or those who have a higher fixed cost or whatever, that it is going to be driving some of them out of the market? And what does that do? Does that make their properties then attractive to other miners to pick up? Or does it just mean that reduces the supply and therefore that helps to support the price structure going forward for those who can continue to produce?
Yeah, I think, once again, I think, that's going to affect the supply side, which eventually has to make the price go up. It can only last, it can't last forever like this because, the demand is still there. So I think eventually the price is going to catch up. It's just kind of like almost like a waiting game to see who can survive the longest, before this thing turns. And, I think we have seen a turn actually. I mean, a couple of years ago, you couldn't finance anything. And then what we've experienced in the last 4 or 5 months is a radical change in attitude towards this business. So I think if you can demonstrate that you have something of merit, I think you will get the money for it done again, and you can. I think you have a chance of getting something back into production. In your current operations and your planned direction going forward, how do you plan to weather this situation we find ourselves in? How do you plan to emerge successful through this? Well, what we focused on, I'm glad you asked that question. What we focused on is trying to acquire some assets that have potentially higher grade material. We have some historical information on some of these things we've been working at that show very, very high grade kind of situations. So we thought, that kind of mitigates exactly what you're talking about the low margins. If we can get something higher grade, it makes, it's pretty simple that, if I can produce, if I have something that's a quarter ounce, let's say that means I have to move 4 tons of material from a mining standpoint and 4 tons through a mill, as opposed to somebody that's mining let's say a 0.15 that has to move 8 or 9 tons to make an ounce of gold. Our company only has to move 4 or 5. So, just the economics of that are big. So we've really tried to focus down again on acquiring assets that are higher grade. And, from our experience in Montana, we found a lot of high grade deposits in that state. And we also acquired one in Arizona that historically had a pretty high grade production numbers. So that's what we've tried to focus on. So, if we do get into production, I shouldn't say if we do, if when we get into production, I think we have a better chance as far as weathering the storm is concerned, because I think I know what we did last time on development ore at the Drumlum, knew what the grades were, and we were cash flow positive on development ore, which is basically you're just starting up, getting the mine operating, and we were cash flowing on development ore when gold was $900 an ounce. So we're looking at similar stuff right now. So the experience that we have and the people we have, I don't think. And we have, because of what we've looked at, I think we've got a lower CapEx. For instance, the Winston property that we're working on currently, there's a major highway within half a mile of the deposit. There's a power line going right through the middle of the area. So those two factors alone are huge as far as development is concerned. It looks, by the geology and by the previous historical work on the property, that a lot of this material is quite close to surface. So that further reduces your CapEx when you go to put something like this into production. And of course that goes straight to your bottom line as far as your cost of producing an ounce. So that's what we've been focused on, because as you pointed out, this is a very difficult business, and a lot of these deposits are a little older now, and they don't have a chance to change what they're doing because that's just the way they were set up. But we, as a new company, we have we can kind of pick and choose what we're doing, and so as a company, we're very focused on higher grade situations that we think can produce and generate profits for the company.
You mentioned that advantage of being a new operation. It reminds me in the technology industry where I have had a lot of career background, the advantage that's surprising and counterintuitive sometimes to what people might refer to as third world nations that come late to the game with technology, but can leapfrog right past the more developed nations because they didn't have that legacy infrastructure that they had to drag along like a ball and chain. They could just go straight, like instead of having to use their old copper wired phone connections to all the home for internet service, they go straight to wireless. And you got these countries you can visit where basically everybody's got mobile devices, everybody's on wireless, and it's like they're in that sense they may be years ahead of some rural communities in more developed, quote unquote, developed countries, that kind of thing. So that ability to not be hampered by the inertia and the sunk costs of a lot of heavy processes and everything can allow agility when facing the new situation. So, what are some of the key milestones that you look forward to, sort of crossing over or hurdles that you see, challenges you see overcoming in the near future that are going to lead you down the path that you see ahead?
Well, first of all, we have an exploration phase going on one property. We announced a letter of intent to acquire another property about a week ago, Dunnigan, and that one's a little further advanced, and we're hopefully going to close on that in the next little while. And the one property is in the exploration phase, although we're not going to be staying in that exploration phase for too long. If the drilling warrants any kind of I'm going to call it a test mining situation, we'll pursue that because, Mike Gunsinger, who I mentioned earlier, he said to me, and this guy's had a lot of experience over 50 years in putting these things into production. One of the things he told me was, Murray, drill for structure and mine for gold. So basically, we just want to figure out what the structure is there and get some continuity to it, and then that would justify maybe because the CapEx is so low, we could do it with a ramp as opposed to a shaft and a few other things like that. That would kind of put us into a I can't use the word production, but a test mining phase a lot faster than most companies would do it. And, basically what we've done in the past, and we did that at the last mine, is that although we couldn't call it production, we were putting levels in on this ore body that we had drilled off Dunnigan, and we put levels in every 40 feet, and we're using the drifting on the ore that we were doing, just like they did back in, I'm going to call it the late 1800s, early 1900s, and we basically drifted on the vein and created some very high grade material that we shipped to a custom mill. We didn't build our own mill because there was a couple of mills in the area. That further, that didn't require the CapEx that would require for another company. So using the custom mill, we were able to offset a lot of the development and exploration costs that we were incurring by the test mining phase that we're doing at this mine, and using that money to develop the property, and then trying to minimize the dilution, because a lot of these things from a shareholder standpoint, a lot of the times you have to keep going back to the market till you get these things financed properly so that you can develop it and produce it. But we were trying to use some of the existing infrastructure that we had in place to, actually do a test mining phase that was paying for itself and actually generating a little bit of profit. And that's kind of the model we're going to use on what we're doing now. The other property, the Golden Jubilee that we just announced, had a test mining phase done in 2014. A bulk sample was taken out of that mine. We're currently going through the due diligence on that, and we've got a lot of very good information on exactly what they were doing there, because Mike Gunsinger once again was involved in that property and has been very, very helpful in getting us into a position where we know what we need to do next. And basically, there's a little bit of drilling that has to be done there. One part of it is to try and pick up a known existing vein in the area. The other is to increase the strike length of a vein they were mining on in 2014. So, we see once we get that, it's a very minimal amount of drilling done that we could basically restart a test mining phase there. The challenge that we have, is to eventually move from the state of Montana has. I should back up 1 second. We have what's called a small miners exclusion. So you can basically start a mining operation as long as you don't disturb more than 5 acres on surface. So our next challenge, once that's underway, is we would go and start a full-blown mining permit. We did that at the other mine, the Drumlin. We started under the small miners exclusion, and we were migrating to the full-blown mining permit while we were doing the test mining at that property, and we were well underway to getting a full-blown mining permit on that property. So, the challenge is of course making sure we get enough money. So far, we've attracted the investment we needed at this stage. When we get into that development test mining phase, it's going to require some more funds, but we think we've got the confidence of the market, or at least our investment people, to back us further. And I think the other thing is that the other challenge is to go from a lot of junior mining companies use contracting firms. And there's nothing wrong with contractors, don't get me wrong, but we would prefer to develop our own, call it mining team. So therefore, that we have more control over what we're doing as far as the actual type of mining we're doing and how we're doing it. The other challenge that we would have is securing equipment to put those miners to work. So that's a big capital investment, that part of it. But there's a lot of good used material around now, used mining equipment at this stage. So we think there's some stuff we could pick up at a reasonable price and actually start our own mining team.
Murray, before we let you go, we are in a very interesting political time right now in the U.S., and certainly from an employment standpoint, economically, things have been in a really distressed and difficult time for a period of years now, both all throughout the world, but also in North America with job pressures and that sort of thing. We've seen major turnarounds in regions of our country where new mineral development has opened up. For example, in North Dakota with the oil industry, that sort of thing. What aspects of job creation or impact on the local economies does a company like yours is it poised to make? What kind of an impact do you make where you would begin operation?
Well, yeah, I can speak from we had pretty good experience with that done again on the previous operation we had, where we created 140 full-time jobs, and they're well-paying jobs, I might add too. We had some guys working in the mill, probably in the $20 an hour range, but the miners were getting paid anywhere from $30 to $45 an hour. And then we were trying, we had some incentives in place that if we had certain production criteria met as far as miners were concerned, they were getting bonus. So we set it up pretty good so that people can make a really good wage, and of course that just trickles down through the whole. Not trickles down. I think in a city the size of Helena, I think it creates a lot of impact. And we hope that we can do the same thing. I think we're hoping that we could maybe get 2 or 3 operations going here in the next 18 months, and of course maybe hire anywhere from 20 to 40 or 50 people, at least initially, and then build on that. So we think that we can create some very good jobs in the U.S. by doing this.
So you mentioned earlier the individual investor. Our channel focuses on how the individual homeowner, family member, can take the steps necessary to protect their family from an unnecessary risk. And you mentioned the benefits as part of that picture of ownership of precious metals. And so bringing it back home again in this way, if people want to find out more themselves about you, your operation, and so on, where can they go for more information?
Well, we've got a website. It's winstongoldmining.com. Would probably be the best area to have a look. They can also contact us. Our phone number, if that's okay to give over the air, is 204-989-2434. We'd be more than happy to talk to anybody that's interested in what we're doing. And also, if they wanted to email us, they could email at info@winstongold.com.
And the name Winston Gold refers to the Winston Gold mine in Montana, near Helena, Montana, that you guys are owning?
Yeah, it's known as a district. It's called the Winston District, Dunnigan. And in that district, there was a lot of the activity happened in, I'm going to say, the 1890s to about 1910. And the historic production of the area, just to give you an idea, they mined 150,000 tons of material in that district. And the historical records show they produced roughly 100,000 ounces of gold. So that gives the district an average grade of 0.66, which is very high grade. So at least initially that, we named the company after the district, but since we've expanded into a couple other areas in the state of Arizona now with another mine called the Gold Ridge mine, and we have the Golden Jubilee in another part of Montana. I think we're contemplating changing the name to American Gold Mining Company or American Gold Mining Corp, giving it the a broader scope of what we basically want to do. And the reason we chose the United States to focus on, because we believe it's a very good area to operate in. It's a safe jurisdiction. A lot of these companies get into countries that basically can change on a dime, and you could have something going very good where you've got a big capital investment in it, and the next thing you know, the government changes or the political will changes, and a lot of these companies can be in big trouble very quickly. And we thought Canada, the United States, basically focused on what we believe are safe jurisdictions to operate in. As far as we're concerned, would be a good place to start. And we think that there hasn't been a lot of activity in the U.S. and we'd like to lead, kind of be ahead of the crowd in that area. And we think that's going to, I think the U.S. is going to be a good area to look for these deposits in.
Well, Murray, we're sure glad that you've joined us here. Again, you're the first time ever miner that we've had on our show. We've talked for years now about the gold industry and how it affects money, how it affects investors, how it affects political it's a barometer of political confidence and tension and risk around the world and throughout history, a store of value, and how it can help serve individual families. We're just great to have you on here as someone who's inside the industry, producing it, and we just look forward to hearing more of your story as you go forward. So if we can hope to have you back again on here when you've crossed some major milestones you'd like to let us know about. Otherwise, in the meantime, we'll put all the information you gave us and where people can find out more about Winston Gold Corp in the description of this video, so they can chase it down and now if they want to find out more. So thanks again for joining us here on Reluctant Preppers.
Yeah, Dunnigan, thanks for having me. It was a pleasure meeting you today and talking about this.